Hey guys, Kim Stallings of Heritage Risk Advisors back again with another module for you. And in today's module, we're going to be talking about hard money lending. Every investor likes to get involved in hard money. Sometimes that's your only option. Sometimes that's just your favorite option. And I'm no hard money lender, but I've used it too. So let's talk about some of the interesting insurance requirements that come with hard money. Some hard money lenders are really good about making sure they protect their investment. And even though you think you might only need 3 months for your flip, they're going to make you buy an annual insurance policy because they're thinking about extensions, and they're also thinking about they don't know how long it's going to take you to sell it. So there's nothing wrong with needing an annual insurance policy unless you're tight on cash flow. Certain builder's risk policies and flip policies might be really expensive to buy annual. Just make sure that they return upon cancellation a pro rata refund of your money. Now, that can't always be. Sometimes the scope of the work that you're putting into your flip doesn't qualify you for one of the carriers that lets you buy an annual policy and then cancels it pro rata. And that's just the cost of doing business. There's nothing else I can say about that. Another issue that we run into with hard money lenders is they want the loan amount covered. And of course, their loan amount is not only the original purchase, but all the upgrades that you're doing. Okay? You might have some padding in your quote. I'm an investor. I can understand that. You might be requesting more money than just what you needed to purchase and how much you're intending to put in the refi or in the remodel. And I get that. I completely get that. That doesn't mean we can justify it from an insurance perspective. There's only so high that we can push the actual cash value or the replacement cost value on the existing square footage as it stands. And then you've already admitted to your hard money lender how much money you're going to dump into the remodel. And we can add that, so that gives us an aggregate total insured value. But sometimes even that's not enough money. And so you need to have a really good relationship with your insurance broker or your insurance agent so that they can communicate with replacement cost estimators to your lender. Even though you're willing to loan X amount, doesn't mean that the carrier would rebuild it at X amount. And so, the insurance carrier has a responsibility to make sure that they're insuring properly also. They can't insure things for $200 a square foot if it doesn't take $200 a square foot to rebuild it. Do you catch my drift? So be prepared if you're spending a little more money than you normally would because maybe property values have gone up, maybe you're in a more high-end area, maybe you're putting in more high-end product, or maybe there's already very high-end existing product in certain areas of the home that you're not necessarily replacing. You've got to communicate that with your agent. Also realize with hard money lenders, you might have money put in there for things like foundation, and foundations are tricky. A lot of insurance carriers don't want to cover a foundation remodel, but in certain states, Texas is one of them, foundations are kind of a thing. Almost every house has to have some foundation work. And so that's something on the front end. It may take longer to get your insurance to be hard money accredited for a particular project on some deals versus other deals. Let's don't wait to the last minute. It takes time to get it done. If I'm a good agent, you might not be my only customer. So you might need to give me a minute to get some of the insurance taken care of and realize that the nature of your project and the nature of your hard money lender might make it just a little more time consuming and a little more difficult to get that kind of work done. So I hope that helps you guys out. It's Kim Stallings at Heritage Risk Advisors. See you in the next module.